Welcome to our today's feature presentation, Pro Trading Strategies for Private Investors. We want to invite you with clear-cut tools and guidance into the world of algorithmic trading that shall help you to make sound and meaningful decisions from the chart, and with that, put the odds in your favor for coming out of that business within making money. Yeah. And so before we go there, let me introduce myself. My name is Thomas Barman. I'm the owner and inventor of Novelist Trading. Want to make you aware of the risk of trading securities and that we are not acting as broker dealers or financial advisors. We developed systems that we share since 2008 with traders around the world, helping them to make good, sound decisions and being more on the right side of a trade than on the wrong one. Never loss trading does not stand for never losing a trade. It stands or comes from never stop loss trading because we help people how to hedge and protect positions. And you see, when you have high probability, so you do more times the things right and you can protect your positions, you have a good idea of coming out of that business within making a profit. While we cannot guarantee it. At the end of the day, trading is all about price prediction. Yeah. And if we can do it more often in the right direction than not, and I'll show you how our algorithms help you and where they are based on, then we have an edge in being good traders and good investors in that market. Yeah. Buy and sell patterns, they drive the markets. Institutional orders count for more than 95% of the orders. And so with that, they leave a trace which you can spot and you can follow. And we help you that you don't have to do it all on your own. We help you with our algorithms. Yeah, they are giving you ideas when there is a good entry, when there is a good exit, and where there should be a good stop. So the price also can continue in the right direction. And when we bring all of that with the help of our systems in a correlation, then we can make a sound decision. Yeah, when we understand the market behavior of the key market forces, we definitely have an edge and we can trade with it. Yeah, and this is where I want to guide you in to this world today. Algorithmic trading, activity-based trading, institutional activity is driving it, and it can be measured on a level 2 basis, and it shows in 3 dimensions: statistical volatility, price change, the most important, and to a good degree also in changes of volume. Yeah, but without further saying, you heard always a lot about algos, but there's fixed algorithms. Yeah, some algorithms, they have a fixed structure. Yeah, so like here you'll have the Elliott wave. Yeah, 1, 2, 3, 4, 5, and the ABC wave of how they follow. But so that's forcing the market into structure. We don't want to force fit anything into a pre-given structure. We want to measure the happening of now, and then from the happening of now, make a decision of where that should best lead to, and we want to do that more often than not. Yeah. So we want to be more right than wrong, and so therefore a fixed algorithm is force feeding a certain direction. We definitely don't use one of those. We use flexible algorithms that define right now at that spot where we're looking what is the most probable direction. Is a directional move foreseeable? And when it's foreseeable, where are the entries, the exits, and the stops, and what are the probabilities to evaluate that situation? Let me guide you further. So with that, we are coming to the never loss trading idea. So the idea is that there is a happening on the chart that can be measured. And so we have here the base happening, which we call tradecolors.com. And then you see here these boxes. So here you have a combination of 2 red boxes occurring after sequence of blue or red candles. And then there's a trade, and we predefine, okay, so there's my risk. We trade for about that size candle. Okay, we'll do it. And then the same happening comes again here, and comes again here, and comes again here. But what you see also, there's momentum changes, and then there's continuation patterns where our algorithm paints the candles here in red or painted the candles here in blue. Also these opposite facing candles, because they still belong to the up momentum and adding up momentum to until it breaks. Yeah, so here it broke in a sequence of 2 red ones. Then we know here longs are better than shorts. Shorts are better than longs, and shorts are better than longs. So institutional action, that's the first level. Yeah, so what we highlighted here in orange and these blue boxes, that was giving us the idea of what we want to do, when and how and where, and then we can follow it. But where's the edge of such a thing being a follower? It's pretty easy. The edge is you can enter entire positions much faster than any fund manager. Why? Because you're not having so much capital that you need to bring in the market. So you're not throwing supply and demand patterns around. They all have to scale in and have to scale out. But when you see early what is happening, you can be an early participant in those individual happenings. And our algorithms here, within painting them blue or red in the direction that the market's going to go most likely, that'll help you. Yeah, that'll help you a big deal. And we do that for all asset classes and all meaningful time frames. It works for all time frames, but a couple of time frames are not so meaningful. And I'll come to that in the presentation. Yeah. So again, we trade after a two candle sequence. Yeah. So here is stylistic here. So blue, 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 blue after red one, blue, blue. And then we go up. And we are not assuming that trends go to never end. We always assume that about after 5 bars of the same color, something's going to happen. What is it? What's happening? Often it's a retracement or even a reversal, but we want to be out before that action takes place and is seeable on the chart. And so with that, we have very simple rules here. Two blue setups, and the high is surpassed in the next candle. What do you do there? A buy stop order. Yeah. Then you trade along with it. So you have a confirmed direction. Yeah. So not only you, other institutional investors want to trade at that point because this is what makes the prices rise. And the same on the downside, you have a sequence of two red candles, and the low of the second red candle is surpassed in the next candle. Then you trade. What happens if the high or low is not surpassed? You don't trade. Signal direction is not confirmed. You have no need to risk your money because others are not on the spot. And if it then runs, look, we cannot participate in all opportunities, but more than likely, there are more opportunities than we have money as private investors. Yeah. And going ahead, so momentum is expressed in that two candle sequence. And how is trend expressed? It's expressed in the continuation. So when you have multiple blue ones or multiple red ones after the initiation phase coming your way. And you can use that both, and we'll teach that in your trading and for making good decisions. And we get a lot of good momentum traders over the 8 years we are in business that we built. So what we have here, some person wished for that, said, can you take Ford Motor Company? It's not necessarily always a share that we like to trade because it's very tiny shares. I like to trade a little bigger ones, but anyhow, I want to demonstrate. So here we come in with a two candle sequence. And what is happening? We're going up. And so after 1, 2, 3, 4, 5 of that, what's happening? Here's some readjustment. And then a gap strategy comes in. And you'll learn that. Yep, everybody has the belief that gaps close, they do. But if you assume so that you're not in forever in a trade, you'll pack that here, you'll trade it for two candles and you're out. And you'll do that continuously if gap strategies can be traded nicely that way. And so then here you have two red ones, but the next candle doesn't take out the low, so no trade, but an opposite. Here we have a trade setup and it's continued. Yeah, and again we have a gap situation. Yeah, wonderful. Yeah, so somewhere down the road the gap was closed, but if you count it again, 5 bars in the trade, you would be in it, and then you have a short situation. But what happens here? Next candle didn't cut the low, had no reason to trade, but then a long situation, so you were able to take that to the upside, and then a short situation comes up again. So okay, I'll take that too. I can do that, and then long situation not confirmed, so therefore I don't highlight it, and the short situation confirmed coming down. So there we wiggle a little. So what do we have again? A long situation, two blues, highs taken out, and 1, 2, 3, 4, 5, and you see after 5 candles there's a little bit of a fumble, and then we'll gap up again and we'll make a move. So can you do this? Absolutely, because you know now you have a situation where you dissected all these moves where you had assumed potentially where it's going into all these individual price moves. And so we use here for our chart because it's very powerful for trading. You might not have ever used it. And you might say, hey, look, I don't have time to look at the end there. But look, at the end of the day, it's usually after the end of the day you see it and you enter in the morning. So it's very rare that it happens the other way around. But it's opportunities, but it's not what we want. It's what the market best gives us. Yeah. Okay, let's continue on, and we'll highlight that a little so that you see it in closer view. Yeah. So from left to right, what did I do in that past example? How did I lay it out? And here you see again. So look here. Ah, yeah. The buy stop order was right above that candle here. And we have a little meter up there that tells us how far will the price prediction bring us in average, and also it tells you in max. Yeah, so then you know your 5 bar rule: 1, 2, 3, 4, 5. Fumble, yeah, but you're out before you fumble. And we teach a lot of option trading too. If you do a shorter term option, you want to be out when you're out, because then you're making money. Yeah, so that's a nice way of working with it. Yeah, so in here would have been a failure. Look, we go up, but we get stopped. So there was a stop level around here, so there we are out. But then we continue on. There's nothing is 100%. Yeah, then we continue on, and we got the gap, and we go with it, and then we'll have no situation on here. Right? What does it tell you? 1, 2, 3 good trades, one bad one, 75%. Yeah, not bad. 3 out of 4 winning. That's what we want to have. Algorithmic trading should always get you above 65, 66% in the right direction. And without having all that help of that little algorithm, that's just the first start that we have with trade colors, your trading most likely will be much more eruptive, or you already mastered it and you don't need to listen here. Then you can help, hopefully, others to master their trading and move ahead and make some money in it. And here again, you see the same situation, and that same situation, you see a situation highlighted, and now you're looking with different eyes on it. Then you see, ah, yeah, blue sequence, going through, understand, wiggle waggle. So all these individual moves can be captured by being framed and followed. And framed and followed not forever, knowing we're going about for 5 bars, you have a very good idea of how long you will be in that trade. So 1, 2, 3, 4, 5, the latest here you're out, but also you had an idea of how far the price move should reach. And when it's two of those spoos, you have an 85% chance that the market starts to reverse or retrace, because some of the key holders will rebalance the inventory. Yeah. And so then you'll do it here again. You said, okay, I'll short that stock. And you see also one thing very essential that you got, besides a long strategy, a short strategy on hand, so that you can really short stocks. You can do it with puts, but it's much more knowledge that you need when you wanted to trade options short term than when you want to trade stocks. And when you're afraid for shorting, we have also a method, short protected, so where we limit your maximum risk. And also, if you use portfolio margin, we can help you on that, that you can leverage your income. Let us now go on a live chart. So that's live, jumping into the platform while I record this. And we'll highlight those situations. We say, look, does it work? And does it work for others too? And so what we have here is the ES, yeah, the S&P 500, the same basis on a 4-hour chart, where we see are the highs or lows taken out by the next candle of such a sequence. And you see here, so then you had a sequence starting going to the upside. Then we'll retrace after a certain period, 1, 2, 3, 4, 5. So we made here double the lengths. And then we retraced a little, and then we're coming up again, going to the upside. And you see, based on those colors, that you get help. 1, 2, 3, 4, 5. Oh, and then we have wiggle waggle. So no direction. Yeah, so no direction. So you saw here 2 blue ones, but the high not taken out. 2 red ones, the low not taken out. And now we have 2 blue ones, and we'll need to see where the sequence is going to lead us, because we're going to trade with this. But that's pretty simple and easy. And let me do one thing. I'll scale down with you, because you should see really live what's going on here, so that you see that's not made up somehow. It is just all real life data. And we'll make that a little bigger. And then you see here, okay, from the left to the right, is it repetitive? What I did now is I switched an hourly chart on, yeah? And so on that hourly chart, you saw here, okay, there was a sequence. It got followed, it got interrupted, a new sequence was initiated and followed, and a new sequence was initiated and followed. Yeah. So then you had a short sequence, and it was stopped, but you know it's three good trades, then you have a bad one here. So then you have a long sequence and it got acknowledged, short sequence not. Yeah, and so that then we go in and make that chart a little bit tighter and looking into today's environment, and you see something like, let's go very, very close into this. So that's today's trading day. So we came into the day short, yeah, from the prior day's closing. And you see here, you could have traded this one, yeah, 1, 2, 3, 4, 5 here, very nice shorts. Then afterwards we have a juggling around. So you have two short environments, but not confirmed, but then a long environment. So imagine you were up having with this system on hand, and then in the morning you'll have this one, and you know it's not going to last more than 5 candles. You had a trade, and now you're waiting because you have reached shoveling and you want to see if there's another candle going down there somewhere, and if the low is taken out, then we would have a trade to the short side. And we'll help you with price patterns also to have an understanding what's more likely, what's more probable in the sequence of what I'm doing here. That's not all possible because we always teach one-on-one, and we teach for longer sequences. So our programs go from 4 hours individual teaching, that would be for trade colors, to 20 hours for individual teaching, like on HF or on our top program, Novelist Trading Top Line. Yeah, so we'll teach very many different strategies. In any case, you always leave with a business plan. What's a business plan, or what's meant by that? It's going to be a financial plan. What it will be your financial expectation for the account that you have, and we'll give you the program the way that we don't need to see your account, so you can fill in the numbers. We give you the principles and watch the amount of trades and how you can do that and how to follow it to go and produce income on a constant basis. Here's the current situation of the Aussie dollar. Switched over, yeah? Aussie dollar 1 hour chart, and you see again, and work with me through the individual happenings. Yeah, so long environment, long taken out, 1, 2, 3, 4, 5, then a little bit of fumble and move through, and you learn in our sequences of how you can capture and catch trades on the go. So then he had short, and had you taken these shorts, then he would have been stopped. So that would be bad, but then afterwards you have immediately a good trade to the upside, and you come in here with a wonderful, great opportunity in the after hour session to the downside on the Aussie dollar, and that's today, and another one to the upside. And currently, we would have a setup that gives us an idea of potentially shorting the Aussie dollar in that direction. That's an hourly chart. So you see, in a matter of the last couple of days, you have plenty of opportunities for working on good trades. Did it always work? No, but it worked more often than not. So you have one good trade, two good trades, three good trades, four good trades. This one is open, and one bad one. Yeah, so 4 out of 5, I'll take that for everything. And does your current system give you that opportunity? Does it highlight the overall trend? Does it highlight where you get into? And that's our really, really, really first basis. Yeah. So this mentorship program with 4 hours individual training, 1 month of getting all your questions answered. We give you a report also on all assets that fulfill that. And you also have a watch list recorder here telling you for certain of the time frames to trade which of the asset classes that you're looking at or the individual assets have the 2 candle setup. So you all set, you have your own individual system, you're your own analyst, you got everything ready from one computer. And the cool thing is this program is installed on a program which has free data access. So that means you don't have to pay exchange fees or fees to that brokerage house. The data come to you, and you can keep your current broker relationships. If you trade with MetaTrader or with TradeStation, or we have many that trade with Ninja, you just look here on that chart and you execute your orders on the second platform. So you don't have the need for change. You can change because the platform is wonderful. There's also a very good broker behind it. Yeah. So just giving you the most flexibility, most opportunities. Look at what just that simple algorithm is going to do for you, and I'm going to show you more. We are looking at the same live chart for the Aussie dollar, US dollar right now, and here now with the top line program. So you have many more indicators and situations on, and you have here the help here, so clearly spelled out where do we buy and sell. Yeah, so where's my buy stop order? Yeah, and you have a target that's always formulated out on the chart, and that can carry you. And what you also have is you see here these red lines. They're giving you an idea of where to trace or trail your stop if you want to trade for longer time frames in that asset. Yes, you see here, okay, so this is how I can trail my stop if I want to go up with that. And you see blue environments are long environments, red environments are short environments. And when we count up the trades, this was a good trade, this was a good trade, this was a good trade, no trade here. So we have then 4 good trades. This one would be a loser if you take it, but we'll also show you that it's not necessarily, because you want to trade a light tower mostly at the first candle of a sequence. And this is number 1, 2, 3, 4, 5, 6, 7, 8. So we are far down the road. So I would not have taken that, but mechanical traders would. So we have 1, 2, 3, 4 good ones, 1 bad one, and that's it. Yeah, so still very high attainability with a lot of convenience, because when you see here, this is where you trail your stop. Yeah, so when you trade one of those turns, and there's surely more to it that we teach, but I just wanted to show you a different chart, more advanced, where you will have these gauges of volatility that the program goes with you, giving you an idea of how much risk you're supposed to trade to stay in the trade, and also having a clear idea by the SPOO development of how far you're trading. Yeah, so right now at the current 1 hour chart here, the SPOO we are trading for would be 16 pips here. Yeah, it's not bad. Yeah, $160 on one contract and or one lot, and so that would be a good thing to trade for. And also we would help you then to balance your risk reward. That would be the size candle that we are in right now. So you see the size candle up here. So you have 78.03 at the close, the low 77.94, and the high oh 09. So 94 to oh 09, that would be 15 pip risk. Yes, 50 pip risk, 16 pip reward. That's balanced. Yeah, so that could be a trade that is acceptable when there would be a signal. So right now here with that concept, there is no signal at that point in time. But what you see is everywhere those trade colors are involved. So had you not captured it here, the trade color concept would have given you a second entry here. And so with that, you have multiple opportunities to read in those charts, because we always capture the same. And also for people who start with tradecolors.com, want to upgrade later, you will always get acknowledged your tuition you paid, because you already learned the key principle. You just get more features and more accuracy into your trading within upgrading to a higher value system. With the help of our algorithms, we want to give you the tools on hand for making meaningful decisions in both directions, to the buy and to the sell side. And within that, we help you to predict the price direction or the future price direction more often in the right direction than not. And that's essential. Yeah, that's very essential. This is most likely where you struggle. Why does the price not go into my direction? Where do I enter the trade? We help you with our algorithms and activity-based trading, following institutional money moves and determining that on the chart without too much of analysis. Yeah, it's very simple to follow a 2 pattern concept or to buy when it's written on the chart. Yeah, and we take a calculated risk. That's what we do in our risk management side of the business, because that's always important. Look, the best what we do is we predict the future. However, we always take a calculated risk, and that has to fit your personal risk tolerance. And we will build our program always around your individual risk tolerance, your individual desire of what you want to reach. And from there, we build a business plan. What's that? An action plan. So what to do when and how to prepare, and a financial plan, so that you know what can you expect or should you expect from your trading activities and from your investment in certain time frames, in certain asset classes, and in certain ways of trading. Yeah, so we work on all that together with the algorithms, getting you prepared for making good, meaningful, and sound business decisions. If that excites you, we are looking forward to hearing back from you. Contact us either by phone 866-455-4520, or you write an email to contact@novelistrading.com. And when you are certain, look at our webpage, what system would suit you, what would fit your trading style. We always custom tailor make that for you. Then we'll work together, and we come together and we give you a live demonstration of how and what you could do and achieve with the Novelist trading system, starting as proposed today. Tradecolors.com, our basic introductory system, leading all the way to the top line system. Yeah, we're looking forward to hearing back from you. We're always only focusing on one-on-one training, so therefore we're not always open for new students, but we're open now. Yeah, thank you very much. Hope we could excite you, and we're looking forward to hearing back from you. Bye-bye.